This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
A very good afternoon, everybody, across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals.
We're everywhere.
We are. Bloomberg platforms all over the place. Hey, having said that, this is Happy Hump Day. It is Wednesday, and it's a Jobs Wednesday. Typically, we talk about Jobs Fridays.
We didn't last Friday.
No,
thanks to the government shutdown.
Exactly. But we did get a read on the U.S. labor market. The report has traders paring back bets on Fed rate cuts this year. So we're going to get more on that and more on the trade in just a moment.
Yeah, we talked to low hire, slow fire on U.S. jobs and really dig into what's actually going on.
Yeah, because I feel like the monthly data gave us one thing, and then the revisions may be another story. So we're going to get into that. Hey, so delighted to have back with us Aaron Jagdfeld. He's chairman, president, and CEO of Generac. It is all about powering up, I should say, and providing maybe backup power for all of the data centers that are being built up. This stock, by the way, the company came out with its results, number one gainer in the S&P 500. It's also on a tear year to date.
Also changing global alliances as President Trump ponders over a key trade alliance. Also the Middle East and that meeting between Bibi and Donald Trump.
Also, Venezuela, stuff going on there as well. So a lot coming your way geopolitically. Let's get you going, though, with a check on the trading session. In for Charlie Pellet, Nora Melinda.
Hi, it's 2:01 here on Wall Street. I'm Nora Melinda. We check the markets for you all day long here at Bloomberg. We have U.S. stocks fluctuating between small gains and losses. We got the S&P 500, little change. The tech-heavy NASDAQ 100 up about 0.4% higher, while we have the Dow Jones Industrial Average sliding by about 0.2%. We have the 10-year Treasury yield in focus. It's sitting around 4.2%, and then the 2-year Treasury yield at about 3.5%. We've got the VIX just above that 17 handle, and WTI trading at about $64 a barrel. Bitcoin sliding today, hanging around that $67,000 mark, while silver hanging around $84 per ounce. A redhead just last hour, we did see that the Federal Reserve plans to abandon some confidential warnings sent to lenders to improve operations as part of Vice Chair Michelle Bowman's effort to relax oversight of U.S. financial firms. In earnings, we did see Robinhood among one of the worst performing stocks in the S&P 500, shares tumbling after it reported lower profit for the fourth quarter, declines in Bitcoin and other cryptocurrencies at the end of last year weighing on results. And Mattel tumbling for double-digit losses. That's the worst day since 1999. The toy maker's forecast for 2026 adjusted EPS fell short of the average analyst estimate. Zillow shares sinking to their lowest level since 2024. We did see legal costs and expenses from its partnership with Redfin weighing on results. And Jobs Wednesday, you called it out earlier. We did get a late jobs report out this morning that showed the U.S. added 130,000 jobs in January. That's the most in more than a year. Meanwhile, we did see that the unemployment rate decreased unexpectedly. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
It is indeed. Nora, thank you so much. Massar, Tim Stenovec live here at Bloomberg headquarters in New York City. Yes, we finally got the monthly labor report, which was supposed to be out last Friday. We've talked about that. Today's data showed U.S. payrolls rose in January by the most in more than a year. The unemployment rate unexpectedly fell, suggesting the labor market continued to stabilize after the start of 2026, and yet not so fast, Tim.
The U.S. labor market coming off one of its worst years for hiring in decades. Revisions to employment figures showed the nation added 181,000 jobs last year. That's the lowest annual total outside of recession years, going all the way back to 2003. That averaged out to just 15,000 job gains per month. That's down from an initially reported 49,000 pace. This according to data that we got today from the Bureau of Labor Statistics.
All right, with more on where we are exactly in the U.S. labor market, because it feels a little confusing. Constance Hunter with us, chief economist at the EIU, the Economist Intelligence Unit. She joins us from Wellington, Florida. Hey, Constance, good to have you back with Tim and me. So January stronger than forecast. Revisions show a little bit of a different picture. What's your read on the U.S. labor market and why?
Yeah. So, I mean, for those of us that had forecast a recession in 2025 because of policy uncertainty, because of tariffs and other changing policies, I suppose one could say it feels a little vindicating because we did have a bit of a labor market recession, although other aspects of the economy were firing all cylinders. And I was at Davos last month, and the thing that I heard over and over again from companies, and not just US companies, was we put ourselves on hold in 2025, and we are done with that. The tariffs are bad. They're worse than was originally expected, less bad than originally announced. And all of the other policy uncertainty, I think, to borrow a phrase, the corporate leaders are getting uncomfortable being uncomfortable. And so they're just viewing of it's time to get on with it. But last year was very much a stasis year in terms of hiring.
Yeah, I'm wondering about long-term implications of this. I mean, because if we think about it from the perspective of immigration in this country and the way that the labor force will be changing in the coming years, where workers are going to come from, especially for certain jobs in the trades, for example, in construction, in home building, which we know this country desperately needs. What's your view there?
Yeah, well, I would add to that home health aides and
good point. An aging population,
right?
yes.
So, yeah, well, if you look at the BLS projections of the jobs that require the most absolute increase in workers and the highest percentage change of workers, healthcare has been in that list for at least the last decade. And of course, we're also going to need construction workers to build homes. And a lot of these professions draw upon an immigrant population. So it's certainly, I mean, to borrow Powell's phrase, which is still apt, we're in a very curious balance in the labor market. And of course, if we have fewer or lower population growth, wherever that comes from, we know that you have to make up that for potential GDP in terms of productivity. And while we seem to be in the midst of a pretty solid period of productivity growth, that lack of labor force growth is a long-term problem.
So, yeah. So I'm really wondering, I think about, you are currently a board member on the National Bureau for Economic Research. They are the official, we all know that, the official arbiter of recession. So the start and the end dates. Where are we in this business cycle? And as you look at these longer term trends, maybe with the U.S. labor market, what does it possibly mean in terms of our economic cycle, how that might change, and maybe how it might be more stressed in the future?
Yeah, well, I mean, certainly if we look at labor force growth, that's generally speaking more of a cyclical thing. I mean, I'm sorry, a structural thing. However, when we look at what happened with COVID, right, we had a big decrease in the number of people entering the country during COVID. We had some makeup and a big increase for several years. And now we're at this place where we're not having that many people enter the country. That has distorted a lot of the data. In addition, when we look at the labor market data, it's also distorted by the layoffs during the pandemic, the rehiring, the frenzy to rehire, the fear and labor hoarding that existed for a while. And so as I look at the business cycle, what you're forced to look at is things other than the labor market, in part because that data is so distorted. And so if I look at something like corporate profits, they're actually looking pretty strong. And we've never entered a recession when corporate profits are growing. Usually corporate profits begin to decline a little bit prior to a recession. It's a really important indicator. With that said, the economy has also withstood massive shocks last year, not just on the labor force side, but again, on the tariff side. And we seem to be sort of plateauing in terms of the volatility in that regard, right? We seem to be sort of reaching this sort of equilibrium, albeit with higher tariffs, that I think firms are going to be able to better plan. And so I would say if we were to make a baseball analogy, it looks like we're in, I don't know, the 6th or 7th inning. It's hard to say how much AI and that diffusion of AI is either going to extend the expansion or perhaps cause some significant disruptions.
Speaking of potential disruptions, we have to end with talking about geopolitics. We're going to be talking to Annmarie Hordern in just a minute. She's actually in Venezuela. You've been a member of the National Association for U.S.-China Relations since 2004. Geopolitics, not just between the U.S. and China, but the U.S. and the Middle East, the U.S. and Canada and Mexico. What relationship, in your view, could be one that, if it does unravel or if it does change, could be the most damaging to the U.S. economy and the investing economy?
Well, look, and I'll add Canada with Mexico. Since NAFTA and then the USMCA, which I must point out is really the TPP, right? So the Trans-Pacific Partnership, to which Canada, Mexico, and the US were all a party, fixed a lot of the problems with NAFTA. And so the USMCA really pulled from that agreement that took years to negotiate. And these trade relationships are very deeply integrated. If in the renegotiation of USMCA, we see a breakdown in that would be deleterious to the real economy in the U.S. and, of course, would then impact capital markets.
Great stuff and great setup, because we're going to actually even be digging deeper into that relationship between the U.S., Canada, and Mexico, because President Trump's certainly pondering maybe something else. Always appreciate it. Constance, be well. Constance Hunter, she's chief economist at the Economist Intelligence Unit, joining us there from Florida. All right, we're going to stay with geopolitics. President Trump's energy chief, Energy Secretary Chris Wright, arrived in Venezuela today, meeting with the nation's new leader and assessing its energy infrastructure. He is meeting too with oil producers and other officials as the U.S. pushes to revive Venezuela's beleaguered oil sector. With more, we do head to Venezuela and Bloomberg surveillance co-host Annmarie Hordern. She is in Caracas. Annmarie, tell us about what's going on, what's moving forward, if anything.
Well, just about 20 minutes ago, Secretary Chris Wright sat down with acting President Delcy Rodriguez. They're in a meeting now. We're at the presidential palace, and it's their version, say, of the Oval Office. So he's having high-level meetings here with the acting president, with the government, and then as well with business leaders. And we spoke to him briefly on the plane before he landed in Caracas, and he was talking about the fact that if you want to transform the trajectory of a nation, you could do more with commerce than, say, with boots on the ground or then with bullets. They also, really, this feels like a trust-building exercise between acting President Delcy Rodriguez and her new administration and the Trump administration, because he is the first highest-ranking U.S. official to visit Venezuela since, of course, President Trump and U.S. Special Forces captured Nicolas Maduro earlier this year in early January.
President Delcy Rodriguez receptive to this group? Is she receptive to American companies extracting oil from the country?
I mean, absolutely. What we've seen so far is the Treasury Department and OFAC really lifting some of these licenses, making it easier for U.S. companies to come in. Venezuela certainly understands that they want to, as her brother put it recently in an interview, Jorge Rodriguez talked about reinstitutionalizing Venezuela and these institutions, and he was saying that needs to happen before there would be elections. So Venezuela needs that capital in flight. There obviously needs to be structural reforms put in place in this country so that U.S. companies could have the confidence to come back in. The Secretary, of course, will be also visiting some Chevron oil fields. Chevron has been operating in Venezuela for 100 years. They're not going anywhere, but they have a presence here, so they're easily able to expand. It's other companies. Are they able to come in? And so far what we hear is that some of the big ones, it might take time. They want to see more stability on the ground, rule of law. They don't want to see any sort of political chaos. The wildcatters, those individuals that are a little bit more nimble and small, they're the ones that right now have a tremendous amount of interest in Venezuela. We should also note all of this is going on as some U.S. companies are looking to come back into Venezuela. It is happening also as the U.S. government is trying to reestablish a presence here with the embassy. There is a presence on the ground. I was told that cars are parked there, but they haven't been here since 2019. I've heard there's even mold given this climate that developed in that embassy. So a lot of work needs to be done. But what I'm hearing on the ground is that this has been the most hyped visit since, I would say, the embassy left, the United States left in 2019, but also since former President Bill Clinton visited Venezuela in 1997. Of course, that was the last year before Hugo Chavez took over in 98.
Yeah, totally got it. And there's hype, right, as you well know, Annmarie, and then there's the reality of what needs to be done in order for those major oil companies here in the U.S. to actually go in, all in, because they are still, it seems, very, very cautious. All right, Annmarie, thank you so much. Annmarie Hordern, she is, of course, one of the co-hosts of Bloomberg Surveillance on Bloomberg TV. Our tour of the world's relationship continues, and we go to a meeting that's been happening at the White House today between President Trump and Israeli Prime Minister Benjamin Netanyahu. Prior to that meeting, Prime Minister Netanyahu signed on as a member of the Board of Peace. This, according to his office, they put that out on X. And then Bloomberg, ahead of the meeting, has put out a lot of analysis, and they noted that Netanyahu is pressing President Trump to include Iran's ballistic missile program in any diplomatic deal with Tehran. And that, if President Trump follows that advice and demands that Iran roll back or abandon its sizable arsenal, talks are likely to implode. It's testy.
It is testy. And just before we went to air, just a couple minutes, the president sent out a post on Truth Social. He said he's just finished meeting with Prime Minister Netanyahu. Nothing definitive reached in that meeting. The preference is to make a deal with Iran.
All right, very interesting. Lots at stake, as you know, Swith. What we need to keep in mind, really reading the tea leaves as she does so well. Great to have back with us. Bloomberg News Middle East geoeconomics lead, Dina Esfandiary. She is with us from Geneva, Switzerland. Dina, it is always great to get some time with you. I know it's later where you are. What is your read on what's going on at the White House here and those headlines that Tim just laid out for you?
First, thanks for having me. So I think really what Prime Minister Netanyahu will be trying to achieve with this meeting is first to really impress upon the Trump administration how critical this time is, how important it is that during the negotiations with the Iranians, President Trump really takes on board Israeli red lines, and there are several of them. One is to roll back Iran's nuclear program. And most importantly, I think, is to roll back Iran's missile program. And this is where the sticking point is likely to be.
Well, the nuclear program, we saw what the U.S. did to that in 2025. What are the details that we need to know about the missile program and what the U.S. or what Israel wants Iran to roll back?
Well, the missile program is critical to the Iranians. They developed it indigenously, largely, under waves of sanctions. So it's a source of pride. But most importantly, it's Iran's first line of defense. They really consider it critical to their deterrence capabilities, especially after Israel really attacked its partners in the region, its proxies that it was also using for defense. So for Iran, its missile arsenal is critical. It's quite advanced, and it can reach most of the Middle East, which is why for Israel, it's a real concern.
Yeah, totally get it. I mean, realistically, you have followed this region, this area for a long time. And I don't know whether it's conversations with you and with others that Iran is where so much of the terrorist activity, right? The various groups that threaten the region and threaten peace or stability. So what's the likelihood? What is the kind of agreement that Iran signs on to that would lead to greater peace and less terrorism in the region?
Well, Iran has been pretty clear what its red lines are. It appears clearly willing to talk about its nuclear program, not all aspects of it, but most of it. I think Iran's ability to enrich uranium is a little bit of a sticking point. But beyond that, it's been very clear that missiles should be off the table, but it won't talk about them because they're so important to Iranian defense. And finally, it's shown a little bit of openness to talk about the state of its relationship with some of its partners in the region, partners like Hezbollah, Hamas. These have always been critical, again, to Iranian defense, but I think they're considerably weakened. And so while they may not be on the table as such, Iran is never going to break off support to Hezbollah, for example. It may be willing to talk about aspects of this support, how it could roll some of it back, take into consideration some of the U.S.'s interests in the region.
Well, Dina, speaking of the U.S. in the region, we're getting some headlines from the Wall Street Journal. The U.S. plans to send second aircraft carrier to the Middle East. The Wall Street Journal cited 3 officials on aircraft carrier deployment plan. The president has not given official order to deploy the carrier. This all coming from the Wall Street Journal just moments ago. In terms of the buildup of the U.S. military presence in the region, what should we be prepared for?
It's clear that what Trump is trying to do is really demonstrate to the Iranians that the threat of military strikes is a very credible one. And that the U.S. and its allies are preparing for any kind of potential blowback from the Iranians. Having said that, the U.S. has more than enough capabilities present in the region to already conduct airstrikes on Iran. The additional capabilities that are being sent are really to improve its ability to defend its assets and its allies in the region, and also give President Trump the option of having a much longer military campaign against Iran should he want one.
President Trump certainly talks about Prime Minister Benjamin Netanyahu, certainly in friendly terms, has for a long time. And yet there has been some pressure that he has also put on the Israeli Prime Minister. But is that friendship potentially problematic in figuring out a deal here?
I think that the Israelis are a complicating factor for President Trump's plans. He's campaigned on being a president that wants to avoid wars, that doesn't want to get bogged down in the Middle East. But the U.S.'s relationship with Israel is part of why President Trump right now is trying to be so strong when he's facing the Iranians. It's also part of why he's sending so many military capabilities to the region to ensure that Israel is properly defended if the U.S. strikes Iran. So it's a complicated relationship, but it's absolutely not a relationship that's in doubt in any way.
One last thing I want to ask you, or we want to ask you about, you've got a column out, the $108 oil war. I'm looking at crude right now, New York crude, or West Texas, at about just below $65 a barrel. But you write this column, Can the Middle East Crash the World Economy? And you look at three broad paths for how Middle East shocks could play out. What's the most extreme case? What's the most likely case? Because something like this will certainly have global economic implications.
Absolutely. So I'll start with the extreme case. The extreme case really is one in which President Trump strikes Iran hard. Iran sees this moment as existential, and so it retaliates hard. What does that look like? It looks like not only striking at Israel and at U.S. assets in the region, but also at energy infrastructure throughout the region. It may also follow through on its threat of closing the Straits of Hormuz. And if it does that, then not only is oil production being hampered, but the export of oil is also going to be in trouble. And that's a scenario in which the price of oil may skyrocket. The more likely scenario is that this is going to be some kind of managed escalation, where we are likely to see a short but temporary brief spike in oil prices, and then the market will adapt shortly after, because the Iranians and the Americans will try to find an off-ramp.
So appreciate it, as always. And again, thanks for staying up for us late. Bloomberg News Middle East geoeconomics lead Dina Esfandiary joining us from Geneva, Switzerland.
Excuse me?
Switzerland. We all know about that. Try that again. 3, 2, 1. Hey, coming up, we're going to talk about the number one gainer in the S&P 500 reported earnings. It's also a top performer in the S&P 500 so far in 2026. We've got the CEO of Generac. Looking forward to that conversation.
I'll keep an eye on the markets and everything happening in the trading day. We got Nora Melinda in the Bloomberg Businessweek studio. Hey, Nora.
Hey, well, it's 2:22 here on Wall Street. I'm Nora Melinda. We check markets for you all day long here at Bloomberg. U.S. stocks are swinging between small gains and losses. We did see declines in software stocks, sparking some unease. We do have the benchmark S&P 500 up by about 0.2 percentage point, while the tech-heavy NASDAQ is up about 0.5 percentage point. The Dow Jones Industrial Average just below flat. The 10-year Treasury yield hovering near 4.2%, while the policy-sensitive 2-year sitting around 3.5%. The VIX hanging around that 17 handle, and WTI at $64 a barrel. Bitcoin sliding today, trading around that $67,000 level, while silver is at about $84 per ounce. Digging into some earnings, we did see that Zillow is hitting its lowest level since 2024. That's after its first quarter profit fell short of expectations. Legal costs and expenses from its partnership with Redfin weighing on metrics. And over in autos, Ford is rising after it said it expects profit to jump in 2026, despite a surprise $900 million tariff bill at the end of 2025. The automaker is planning to launch new models priced under $40,000 by the end of the decade. The rollout will start with an electric four-door pickup truck in 2027 and continue with both gas-fueled and battery-powered vehicles. And finally, rideshare company Lyft is falling after the company reported fourth quarter revenue that came in below expectations. It also delivered a forecast that disappointed. The firm pointed to a shortfall of $168 million impact from settlements related to legacy driver classification matters. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
All right, Nora, thank you so much. So, folks, it's often all about the outlook, often for investors. And so shares of the global designer, manufacturer, and provider of energy, tech solutions, and other power products, we're talking about Generac, they're rallying today, top gainer in the S&P 500, after the company forecast a 2026 EBITDA margin range with a midpoint above analyst consensus. The street weighing in, KeyBank, noting that despite net sales for the fourth quarter missing analyst estimates, shares will trade higher on 2026 outlook and positive data center developments. Shares of Generac, by the way, what is wrong with me? I think I need a new generator is basically it.
I like that.
They are up nearly 60% year to date and is the third best performer in the S&P 500 this year. We are delighted to have back with us the CEO of the company.
Aaron Jagdfeld is Chairman, President, and CEO of Generac, joins us from Wisconsin. Always good to have you on the program. A day like today, the stock, the best performer, as Carol mentioned, in the S&P 500, up double digits for the year already. Investors are looking through this clearly. They're all about the guidance, but just share with us why the earnings miss when it comes to the fourth quarter. We're going to work on getting his connection back. We're speaking with Aaron Jagdfeld, Chairman, President, and CEO over at Generac. Go ahead, Aaron.
See, we're all having energy, right? We all need a backup generator today.
I guess we need our generators to kick on here. Sorry about that.
No worries.
All good.
I lost the program.
Hey, I was just asking, obviously investors looking through that with today's stock performance, but why the miss in the fourth quarter?
Yeah, so the back half of the year, we actually had a lot less outage activity. So our residential business, for portable generators, home standby generators, really depends heavily on Mother Nature, honestly, to help us drive demand for those products. And so it was a very quiet back half of the year, the fourth quarter in particular. Back half of the year was 90% lower in outage hours versus the year before. So sometimes that happens, and we guide based on kind of average outage activity, and we got a lot of below outage activity in the quarter.
Well, it's interesting, so what gives you confidence around mid-teens growth when the weather has been the primary culprit for weak residential sales in 2025?
Yeah, so on the residential side, obviously, we think a return to normal outage environment that will happen. I mean, we will get ice storms again. We had one in January, right, with Winter Storm Fern. So we're off to a good start here this year. And so we feel like, we're going to return to more normal kind of outages and more normal patterns, if you will. We've got some pricing in there as well. The consumer for our products is pretty healthy still. I think there's concerns about the consumer across the broader economy. But when your power goes out, these products tend to become a priority for households. So, we're not very worried about the consumer's health, at least for our category.
Yeah, Aaron, explain the consumer behavior here. Is it that a consumer without a generator goes through a power outage in the middle of winter or the middle of the summer and says, I never want to experience this again? And, when they get power back, they call somebody to install a Generac? Is that how it works?
You've got it right. And in fact, I would just point this out. Winter outages tend to drive people to that point a lot faster than summer outages.
Yeah.
I mean, when you have an outage in the summer, maybe it's nice enough and temperate enough outside. You can open the windows and you can kind of push through and survive in the dark if you had to. Winter is a whole different ballgame. If you lose your power in the wintertime, especially if you live in the northern states or in the case with Winter Storm Fern, even in the southern states where you had, just tremendously cold weather, you get pipes that freeze, you get a lot of damage in your home, and a lot of things just just, your home becomes unlivable.
There's kind of an SS moment there for Tim.
Preaching to the choir.
It happened to him. No power during the cold weather. Hey, what I want to ask you is, investors are really noticing the forecast, your 2026 EBITDA margin range. How much of what's going on, the growth, the magnitude, is it all because of data centers?
Yeah, I mean, obviously, largely the headline here is our entry into the data center market. We started shipping products, our first products in the fourth quarter, and we're ramping. We're going to scale this year. We're having some very meaningful conversations as we work towards final contract negotiations with a number of hyperscale customers. And this is going to be, for us, it's a generational opportunity. The backup power that is required by each data center site. I mean, you can literally have hundreds of large gensets sitting there waiting for outages to happen, and the project sizes are enormous, and the opportunity is equal to that.
Is this all about the large megawatt generators? Is it all about that? That's what the demand is for? I want you to get into what is the AI play for you guys? Yeah,
for the most part. So for us, there's a direct AI play, which is, you build a data center, you need to have backup power, because even a second of downtime, there are requirements there, commitments that they've made to their customers, and there are penalties and things that kick in if they can't supply information, or the AI models depending on what they've contracted that data center out to do. Basically, they've got to have a continuous source of power. So they invest in backup generators for those facilities, and that's a product that we're new into, and that's a huge opportunity. The indirect side of data centers is pretty interesting, though. And as more data centers come online, you're going to see a lot more requirements for power, right? Demand is going to grow for electricity. We have supply constraints. In particular, there are parts of the grid around the U.S., like PJM, as an example, up in the Northeast.
Yeah.
This is a major concern on very hot days, very cold days. Going forward, you're going to see more brownouts, more blackouts, and that's going to lead, obviously, to more opportunities for us in some of our core products, like home standby generators for homeowners and other generators for businesses and things like that.
So we each have a million questions that we want to get to.
You want to go back to residential?
Yeah. So on the grid,
Tim might be shopping for a generator, Aaron.
But there's an interesting thing happening in some parts of the country, and I don't want to get into the details of new laws in New York City, for example, but some places are, a few years ago, argued that we want to just get rid of gas lines in general and don't want fossil fuel hookups within new buildings. So new construction in some parts of the country doesn't have any gas. How do you account for that with a product that, you want to have connected to a continuous gas line?
Right. I mean, obviously, you can use LP, right? So if you have an LP tank or a propane tank, that works just as fine. In fact, a lot of our installations in parts of the country like Florida, homes down there don't have connections to, a gas line, because it's untenable for them to be able to put that infrastructure in. So, what's interesting, like in policy-driven areas like New York, when it comes to let's not have new nat gas hookups, oddly enough, you can still have a propane gas hookup. So, those are the ways to kind of navigate around some of those challenges. And again, you're using it for an emergency, right? This is not a continuous use product. So, I think really cooler heads should prevail when it comes to certain policies like that. I mean, you want to make sure that homeowners, businesses have access to emergency backup solutions, right? Backup power, backup, batteries, things of that nature. And those are the things that I think we've got to be careful of when we do policy-related things like no nat gas, new hookups. And sometimes there's unintended consequences of that, and we've got to be careful about that.
Hey, Aaron, you guys have been expanding, and earlier this year you talked about the acquisition of a new facility in Sussex, Wisconsin, and you are quoted in that release saying, "Our commitment to aggressively invest in serving this booming segment offers a generational opportunity," you've used that word before, for Generac, with the potential of doubling our sales of C&I products in the next 3 to 5 years. How confident are you on this? Is it likely more on the conservative side or more on the optimistic side?
Yeah, it's interesting. We've been having these high quality conversations with data center co-locators and hyperscale operators, and there's obviously a massive deficit of supply for backup power generation today, based on all of the things that are on the drawing board to go in the ground for new data center construction in the years ahead. So our entry into this market, we came into the market, we thought there'd be some interest in the product, but we maybe undersized that. Yeah. And to be blunt, we went ahead and we acquired a new facility, and with an eye towards doubling our capacity. We said on our third quarter call, we thought we had about $500 million of global capacity to serve the data data center market. We now have doubled that to over $1 billion with the acquisition of that plant and some of the other investments we're making. This is again, we keep using that word generational, but it's true. Sometimes in business, you can be with a company like I have for over 30 years and maybe never see something as interesting as this in terms of opportunity. And it feels like one of those moments that we have got to go after this. And you see it. I mean, look, you see what other industries are dealing with, HVAC, you're seeing other power companies and things that, the infrastructure needed to handle the data center boom that's on the $650 billion, right, of hyperscale dollars that are going to go to work here on capital expenditures in 2026. They're going to go into things like generators and HVAC equipment and cabling and all the things that make these centers real.
Aaron, we only have about 30 seconds left, but a lot to hit just in the last bit of time that we have with you. Yeah. All the challenges of doing this in the United States, doing this domestically, finding labor for this, the biggest challenge for you as you're running this business right now.
Absolutely. The biggest challenge for us is, the continuing shortage of labor. There's no question that, in terms of the number of people that are going into manufacturing from a career standpoint, that continues to be a real challenge. And of course, now with trade policy being what it is, there's a lot of things that are coming back on shore, which is great, but it just puts that much more pressure on, the labor force.
It's a shame you're not optimistic, Aaron.
I try not to be. I try to be conservative.
Listen, we so appreciate it. All the time you always give us. Be well.
Right.
Aaron Jagdfeld. He's Chairman, President, and CEO of Generac. Hey, coming up, we get one of the most read stories on the Bloomberg. It is an exclusive, another example of possible changing tides between the U.S. and key trading partners. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow lower, the S&P, NASDAQ. They are both advancing. NASDAQ 100 index up now as well. It is advancing by just about 0.5%. NASDAQ Composite Index up 0.1. S&P keeping it all in context up 0.2, while the Dow trading lower by under 0.1%. Stocks did pair an early advance as worries about the impact of artificial intelligence on software companies curtailed a rally fueled by strong employment data. The 10-year 4.17%, the 2-year 3.51%, gold at $5,084 the ounce, spot gold up $58 now, up 1.2%, spot silver up 4.3%, $84.29 the ounce, and West Texas Intermediate crude up 1.4%, $64.86 a barrel. Bitcoin 67,700 on Bitcoin, that's a drop of 1.3%. Robinhood markets declining after reporting lower fourth quarter profit. We did see shares of Robinhood down by 10.3%. Also after earnings, Humana, and today we're looking at Humana shares down 2.2%, and Ford after earnings up now by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Let's get to the most read story on the Bloomberg in the past 8 hours. It is an exclusive by Bloomberg's Josh Wingrove. It's about how President Donald Trump is privately musing about exiting the North American Trade Pact. This is according to people familiar with the matter, injecting further uncertainty about the deal's future into pivotal negotiations involving the U.S., Canada, and Mexico. We don't need to tell you this is a key trade relationship.
We're talking about the USMCA trade pact. Remember, the president was the one who actually signed it into law. We continue to look at it this hour around the globe, the challenging alliances. That's something investors are watching closely, of course. And for that, we bring in Jordan Fabian. He's in our Bloomberg Washington, D.C. News Bureau. Jordan, what's going on and what is the president considering when it comes to this agreement that he renegotiated during his first term?
Yeah, it's a really good point you raised, Tim. His anger over the previous NAFTA agreement is what produced this USMCA agreement during his first term. And now he's saying it's not good enough. And so there's a few actions he could take. The first most drastic action, which he has asked aides about, according to our sources, is withdrawing the U.S. from that agreement. That would be done with 6 months' notice and would, of course, send shockwaves through the global economy. It would really cause a lot of uncertainty for North American trade. Short of that, there's a July 1st deadline where the parties need to decide whether to renew this agreement for another 16 years. And if they don't, they would essentially enter into these annual reviews and negotiations on the terms. of that agreement. So not necessarily going away immediately if they don't renew it, but it would certainly cause more uncertainty to hang over the pact.
So Jordan, so it sounds like a little bit of a clock kind of ticking here. So maybe that's why this is happening. Or I kind of was making some notes. Is this a distraction, a serious consideration? Is the White House looking to provide, kind of create some kind of distraction here? What's really the goal? What does the White House want here?
President Trump has always been about leverage, and right now he's been angry at Canada. He's angry at Canadian Prime Minister Mark Carney for a variety of reasons. Most recently, that speech he gave at Davos, where he took aim at global superpowers without naming the United States, certainly implying it was one who used economic coercion to gain power over mid-sized powers. So the president didn't take kindly to that, and he's retaliating. He's made a series of threats over the past few weeks, saying that he would raise tariffs on Canadian goods if they did a trade deal with China, threatening to not refuse to open the new bridge connecting Ontario and Michigan unless the U.S. gets some sort of concession, among others. And so you could see this as him perhaps amassing leverage in order to gain more trade extractions or concessions on other issues like migration or defense from the Canadians in this ongoing renegotiation of USMCA.
Look, we got to point out that these are the U.S.'s two largest trading partners. They're top buyers of American goods. Because of the trade negotiations, a lot of the goods that go between these countries are actually exempted from the quote unquote Liberation Day tariffs that were announced. And you got to wonder what this means for companies that are trying to navigate this right now. If you're running one of these companies or you handle supply chains for, let's say, an automaker, and you wake up to news like this Bloomberg exclusive, like, what do you do in order to adjust to make sure that you can pull this off?
Well, Tim, I would imagine there's a lot of behind-the-scenes lobbying going on, especially in the wake of this report, because it's hugely consequential for these businesses. In the immediate term, if the deal goes away in the next year or so, they would remove all those exemptions that you just mentioned. And so Canadian goods and Mexican goods are all of a sudden facing much higher tariffs than they do now. And then over the long term, you could see Canada, Mexico, perhaps integrating their economies more closely, or looking to other powers like China to form trade pacts with. And you've already seen that happening with Canada cutting this limited trade deal with China that involved electric vehicles. They're trying to form closer trade ties with the European Union. So you would have this breaking apart perhaps of this North American integration over the last 3 decades where, companies have really tied their supply chains together across the continent. You could see that begin to unravel if this trade deal falls apart.
Well, and that's what I think about, Jordan, right? It's about trade and an important trade relationship, no doubt about that, but it's also about backing one another on other global issues. So you do wonder, as the U.S. keeps jockeying and changing kind of its rules and relationships, the world is moving on.
Right. And so if you have, Canada doing deals with perhaps China or Europe, you see Europe doing deals with Latin America. Trump has heralded the end of the international order, saying that basically he wants to have a more protectionist economy. A lot of other powers might not agree, and so you see perhaps other free trading blocs being set up while the U.S. builds a tariff wall around its own economy. And I think it'll take years for the economic consequences of that to bear out, but it certainly would herald a huge change.
Jordan, in the past, the president has. Yeah, and look, I think quote unquote Liberation Day is a great example of this. The initial news about something doesn't end up being what ultimately happens, and in the meantime, there is sort of a scramble. He's been referred to as tacoing on certain things. You can't predict the future here, but is there any chance this is an opening salvo?
There's a major chance, Tim, and our story is caveated to say that he hasn't telegraphed flatly that he's going to pull the U.S. out, but the mere threat of it is a big deal, and it certainly could be a negotiating tactic. During the first Trump administration, he used the threat of withdrawing the U.S. from NAFTA to get the the Canada and Mexico to sit down and negotiate what eventually became USMCA. And so perhaps he's turning to this tactic again to try and force more concessions from Mexico and Canada. The problem is that Trump is an unpredictable leader, and so it's tough for these counterparts to really figure out where his head is at. Claudia Sheinbaum, the Mexican president, I should add, said today she doesn't think Trump will withdraw, but we'll have to see how that works out.
I think, Jordan, it's because USMCA is an acronym that just doesn't work, and they just need to figure something else out new. Just going to say, NAFTA worked. This one, what would you say?
Well, I mean, it's been around now this is the third presidency.
Like, what do you say?
No, I mean, this is what it's called.
Crazy stuff. Anyway, great reporting and great analysis by our Jordan Fabian. He's, of course, Bloomberg News White House editor. Hey, let's talk Apple. We did see the share price dipping on a story by our own Mark Gurman.
Apple's upgrade to the Siri virtual assistant has run into snags during testing, potentially pushing back the release of several highly anticipated functions. The company, Carol, now working to spread the new capabilities out over future versions, possibly postponing at least some features until at least iOS 26.5 or iOS 27.
Yeah, testing uncovering some problems with the software, including issues with Siri properly processing queries, taking too long to handle requests, and accuracy issues, as well as a bug that causes Siri to cut users off when they're speaking too quickly. It's kind of like doing a show with Carol Massar.
I was going to say it's kind of like the way Siri is right now, and the Siri that we've known for the last decade, which is, I think many people would argue, lacking in a lot of functionality.
Shares of Apple down about 0.9 percentage point. Actually, they're higher. Forgive me. They're up about 0.9, but they've been up as much as 2.4% in today's session. So a little dip lower here on those headlines. All right, that is one of the stocks on the move on this Wednesday. When we come back, more on the market trade and some other stocks moving in the session. This is Bloomberg.